Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Surbhi Upadhyay, and red is still the color of the screen. The Nifty is down 200 points at 24,800. So the mid-cap index is now showing some sort of an intraday pullback, and that will come up for you on your screen. Hi.
Absolutely. Hi, Reema, and happy Friday to everybody. Of course, not much of a happy Friday considering the global sell-off that we're in the midst of. So just to have the context right, please make sure that we look at the Asian screens. Because this is global in nature. I mean, the Japanese market at one point in time was down as much as 5%.
It's still down 5.3%.
Yeah, exactly. So, I mean, globally as well, we're not seeing too much of recovery. In fact, a lot of the others, I mean, regional markets like Hang Seng are down quite a bit. Singapore is down quite a bit. So the sell-off is continuing. The Kospi, the South Korean market, is down 3.5% at this point in time. So this is not a minor profit-taking. It's a major sell-off. And why has the world gone into tizzy? Because suddenly everyone's woken up and, you know, there's a concern around growth. There is a fear about the world or maybe markets like the US getting into recession. So I just want to start by putting up the data points that have caused this kind of, you know, mini panic on the street. A couple of different numbers came in over the last 24 hours. First was the initial jobless claims number, 249. Versus the estimates of about 235,000. The continuing claims also are very, very weak, weakest level since November of 2021. Then we had the ISM manufacturing index, which continued to be further into contraction territory. It fell to 46.8, again below estimates. Now, top this off with the JP Morgan's global manufacturing index. They also release a manufacturing index. And this index has slipped into contraction territory for the first time in 6 months, first time in 2024. The level was 49.7, and JP Morgan in their note around this particular index say that Japan continues to be in contraction, Europe is weak, and now US is also showing some signs of faltering. So again, a lot of data points that point towards this weakness. By the way, today is the all-important jobs data. So till now, the market feels that, you know, weak data is actually good news because you'll start getting rate cuts. But now as the rate cuts come to, you know, finally happen, it seems the market is developing cold feet. I guess, Reema, we'll have to see if the dips get bought. I think in India, that's what's playing out. At least we're not selling off as hard as some of these other global markets.
You know, and even on that Nikkei point, down 5.3%, the Japanese government's annual white paper, which was released today, has warned that a weak yen was weighing on consumer sentiment and it could erode their purchasing power by pushing up inflation more than wage growth. So inflation estimates too have been climbing up, so that's hurting. And for Taiwan, remember, it's been one of the Asian investors' favorite in the entire Asian market screen. So when there is a pullback, the pullback is fairly steep. But let's get to the big story then, right? And this time it's emanating out of the primary market. India's leading electric vehicle company, Ola Electric Mobility, is all set to ride the Lal Street. Sonia joins in first with the details on this issue. Sonia.
Well, everyone is talking about the Ola Electric IPO, which finally opens today. As we know, Ola is India's largest and only pure-play electric two-wheeler player with over 46% market share and is the first ever electric two-wheeler player to hit the exchanges. Now, this IPO is priced between 72 and 76 rupees. The company is looking to raise a total of 6,146 crores, out of which 5,500 crores is a fresh issue and 646 crores is an offer for sale. Now, the company has raised 2,763 crores through its anchor book at a price of 76 rupees per share. The promoter Bhavish Agarwal is amongst the selling shareholders, along with investors like SoftBank, Temasek, Matrix Partners, etc. The company intends to utilize 1,600 crores of the net proceeds for investment into research and development purposes. But let's take a look at the fundamentals of the company now. The revenue growth for the company has been pretty good, as you can see, over the last 3 years. But the issue really lies on the bottom line. The company has been loss-making for the last 3 years, and the losses have actually doubled if you look at it between FY22 and FY24. Losses have gone from 784 crores in FY22 all the way to almost 1,600 crores in FY24. Now, Ola Electric has the highest market share currently in the electric two-wheeler sector. It's far ahead of its peers, sitting at 46.2% market share as of June 2024. And if you look at the other incumbent players, TVS and Bajaj, they enjoy about 17 and 11% respectively. There are, of course, a lot of opportunities as the sector grows over time. The company is looking to expand its product portfolio, looking to launch electric motorbikes next year, and the government, as we know, is committed towards EV expansion. But what are the risks? And there are many. The company has seen, as I said, consistent losses over the last 3 years. It also has a very high attrition rate. In the last 2 years, the attrition has been over 40%. In fact, in FY24, the attrition rate has been 44%, and that raises questions about the work culture. The company has also been giving steep discounts of over 25,000 rupees on their product, which means that as they list and the pressure to profitability rises, they will have to roll back these discounts, which could perhaps impact demand. Let me also leave you with how the valuations are stacked up compared to their peers. This is, of course, not an apples to apples comparison, given that the other players have an ICE engine unit as well. But if you look at it, Ola Electric is much more expensive on a market cap to revenue basis compared to some of the other players like TVS Motor and Bajaj Auto. Back to you.
Thank you very much for that. So the big question is skip or subscribe, and should you be riding Ola Electric into Dalal Street? We now have with us Gurmeet Chadha, Managing Partner, CIO of Complete Circle, and Ashwin Patil of LKP Securities to weigh in on this debate. Gentlemen, it's a very exciting story, the first of its kind. EV, you get an early sneak into the entire EV penetration story, but then there are concerns. It's an offer for sale. I mean, there is a considerable portion of offer for sale. The losses are mounting. So Gurmeet, first come in. You've done the analysis of the RHP. Weigh in with your thoughts.
As you rightly said, it's difficult to evaluate it on a traditional IPO model. I think what's there for them is they're in a very high growth phase. So they did 20,000 units in 22. They did, almost 1.5 in 23, and last year they did 3.3. Such businesses need, the current numbers need to go up 4 or 5 times to make some sense of any operating leverage, which comes into play. I think the key that would hold is that how once they complete the full warranty cycle, they started making in 21, so they're about to complete one full warranty cycle. And they're developing this fuel cell 5 gigawatt factory. So if you see the China model, Chinese government localized the battery component system, the entire EV ecosystem. So their largest battery maker today in the world is, let's say, CATL. Even Tesla uses CATL when it entered China. Today, GM has also signed. So if they can localize the complete EV ecosystem, I think that's when I think that these businesses will get valued much more than what it is right now. Currently, we are neutral on it. We want to probably wait till listing and see how it pans out. Also, if you see the price difference has gone up with the withdrawal of FAME subsidies, so there's some bit of policy uncertainty in terms of what comes up in the new policy. So currently, if you see, iQube is doing about 1.8 lakh units, and Bajaj Chetak is also at about 1.2 lakh units. So others are catching up, and IC guys have war chest to burn cash because they're still making 90%. They have free cash flows, and they can continue to fund this. So the adoption rate is a little slower. If you see 1.2 crore we sell overall, two-wheelers, 1.2, 1.3 crore. The EV two-wheeler is still at roughly about 10, 12 lakhs, which is still in single digit. So I think the key for value creation in this would be how quick the adoption is. But unlike four-wheeler OEMs, the entry barriers are relatively lower.
Okay. Gurmeet, we also have Ashwin Patil of LKP Securities joining in. Ashwin, welcome to the conversation. I was going through your note, and I know you guys are pretty optimistic and you have a subscribe rating. But let me get to the heart of the matter, the losses, right? Because there are losses at the net level. There are also losses at the EBITDA level. To be fair, I mean, the rate of that loss, that is coming down. The rate of increase of losses, that burn is coming down. So that's a good thing. But, how patient will you be in terms of the path to profitability? I just want to put out that line that Bhavish Agarwal told our colleague Yash when we asked him that question on profitability. He says that as we scale up revenue, we'll get a strong operating leverage as fixed costs remain the same. We can have a point in time in the near future when Ola Electric becomes profitable. He's not putting a time to it, a date to it. Ashwin, your thoughts?
Yeah, it's difficult to put a date, Surbhi. But the thing I would say that, look at the losses and the EBITDA margins improvement. We have seen about 43%, 47% coming down to 25% in FY24 as compared to FY23. So it is a very fast kind of EBITDA margin improvement that the company has shown. Even if you go down to the losses also, about 1,400 crores of losses which the company reported in FY23, they have come up slightly at about 1,580 kind of crore numbers in FY24. So we can see that it's very any business it requires some time to become profitable. we all know that it's just a 4-year-old kind of a business that the company has come up, and it's very commendable on the management's part that they have set up such a fantastic factory and facility in the south of India, and they are spreading their wings across the country. So with about 45% kind of 46% kind of market share, they have achieved a lot in last 4 years. So that much benefit we need to give to them. But going forward, I would say that they are coming up with 4 bikes, and definitely, I mean, I would take it with a pinch of salt. But the 4 bikes and the existing portfolio they are having, and the PLI that the government has given them for their top 2 selling models and their battery electrification plant. So no, so I would say that that would definitely come into picture going forward as far as their profitability is concerned. And they have they are way ahead of other players in the two-wheeler electric space. So I would say that we should not look at it at a current on current valuations or current basis. Definitely,
Sure.
Going forward, I would say that at least in the midterm, like 1 or 2 years down the line, at the pace at which the losses are coming down, the company may become profitable. I mean, even the management is not very much sure about it, but so I think that looking at the operating leverage that the company may get, and the competition is definitely there.
Sure.
We are aware that there is a lot of competition. Then the EV demand has not been that great over the past few months, but now it is again picking up. We have seen how
Ashwin, let's break it up and take it one step at a time. And in fact, I want to get Gurmeet in on this. Now, Gurmeet, let's get to the question in context of valuations as well. As Sonia was just telling us that this issue is probably highly priced compared to even some of the listed peers. So it's not apple to apples. But still, as an investor, if I want to add 1 or 2 two-wheeler stocks to my portfolio, I mean, my options could be, say, a Bajaj, which is now looking to really push the envelope, especially with their CNG bike. And apparently, I was discussing with people in the office, some of them who've gone for that test ride, and it's very impressive, apparently, as per reports. And then you have TVS, which is also firing away and really scaling up on the EV side. And then let's say you have an Ola Electric, a pure play, a standalone play. So from a portfolio construct point of view, would you give space to Ola at these elevated valuations?
So Subi, I think valuations, because they're just starting off, and I agree with Ashwin, it's 7 times sales. So it's not, I think this round now is 20% discount to the last round they did, right? So I don't think so they're priced it too aggressively. Also, the OFS portion has come down, which probably gives comfort that you're wanting to spend money on R&D, which is about 1,500 crores. And they want to scale up the current cell capacity to 5 gigawatts, 5 GWH, which means they can make up to 15 lakh units with this current cell capacity. And as I said, the real operating leverage will come from 4 or 5 times volume of what they are right now, which is about 3-4 lakh units. I think the key is how much they can localize, like China. So currently, for example, batteries are 1/3 of the cost, and power electronics are around 20%. And in India also and other places, there is new technology like battery swapping and all. So it's my range, the range is not big an issue. So if like China, India can localize the EV ecosystem, because a lot of the raw materials are very, very, all prices have gone up, nickel, cobalt, etc. And we are in a geopolitical kind of, or not a Gates position with, neighbors like China and where the world is positioning. So can you control cost? Can you localize the EV ecosystem? And that's when valuation comes in. So if they can do that in their future factory where they're making battery packs and the frame, and they can localize more components, their dependency on China is pretty high. Then I think the takeoff will happen. So I will wait it out. Like, for example, not a fair comparison. We waited out for Zomato. Moment Blinkit started showing turnaround, contribution margins started picking up in food delivery. We entered late, but we're still making decent money. So I think I would wait for more, EV ecosystem localization and then take a more decisive call. For now, I'm neutral. As I said, it's a leap of faith if you want to, it's a future technology. It's a bit of a leap of faith.
Gentlemen, we're unfortunately out of time, but thank you very much for joining in. There's another EV player, Ampere. It's an electric two-wheeler. It's a scooter, which is housed under Greaves Cotton Greaves. So that's another EV player when you add, to the other ones that Surbhi mentioned. But gentlemen, thank you very much for joining in. We will slip into a very short break. On the other side, we'll discuss commodities. We'll invite Manisha Gupta on the show.
Welcome back here with us on Trading Hour. Let's now talk commodities. We have Manisha joining in. Manisha, it's been such a roller coaster, right? Equity is still reeling under the impact of all this weak data that we've got overnight. What are you focusing on?
Well, you're absolutely right. You know, for the month of June, we saw most of the commodities decline. For July as well, it wasn't so great as we've ended the month in negative for many of those metal prices. The crude oil prices also were trading in the negative. Silver also went down. It was only gold which actually has been holding ground with nearly 5% of gains in the month of July. And August has started on a better note for many commodities. And this is ahead of the U.S. non-farm payroll data. Well, that comes in today in the evening. This is also important ahead of the U.S. Fed September meeting, where the markets are, as of now, pricing almost 100% probability of a 25 basis point cut. There is some probabilities also now rising of a 50 basis point rate cut, but that as of now is conversation, and we've seen some percentages being assigned to that as well. Well, if you look at the recent few days, we've seen the manufacturing data from US, European Union, Asia come in on the weaker side, and that has been boosting gold. We've seen some safe haven buying come in for dollar as well. The other high yielding asset classes, including equities, are slightly under pressure today. This is ahead of the US non-farm payroll data. Well, if you look at the numbers itself, June was better than expected at around 206,000 new jobs being added. For the month of July, the number is expected slightly lower at 175,000. If you see this number, then we are looking at markets having factored this in. Anything weaker than that, then there is safe haven buying that you can anticipate in gold and in US dollar. A stronger number would really mean profit taking coming in for various asset classes.
Thank you very much for that. Risk of equities, risk on gold right now. Get into a break. On the other side, we will discuss some stocks that are buzzing in trade. Well, let's get to the stock movers. Cummins India is under pressure. There is negative commentary coming in from the company's global parent. Vamakshi joins in with the details. Vamakshi, 7.5% gone on the stock now.
Well, absolutely. Cummins India is down and out in trade today, and that is after commentary that came through from the company's global parent in a conference call that was held yesterday. The global parent said that in quarter two, that is in the quarter ended June, revenues in India, which also includes the JVs, stood at $649 million, which is a downtick of almost 10% on a YOY basis. Power generation's revenue also saw a dip of almost 17% YOY as the base quarter benefited from pre-buy demand ahead of emissions regulation changes. And in fact, for 2024, they expect in India the total revenue growth, which includes the JVs, to be at almost 8%. But it is important to note that Cummins has 7 entities in India, including 3 JVs, out of which Cummins India is the only listed entity. So the numbers that were mentioned by the global parent are for all of these entities combined and not just Cummins India on a standalone basis. But the decline in power gen revenue that the company mentioned, that is a bit of worrisome for the listed entity. However, channel checks that were conducted by Motilal Oswal suggest otherwise. They said that the demand was looking quite good for power gen sets in the first quarter. They also said pricing for CBCP4, which is the product that complies to the new emission norms, was high by almost 30 to 40% across most nodes. In fact, Motilal Oswal also noted that the company was expanding presence across all nodes and was likely to gain volume market share in the current norm shift. So as of now, the commentary that came through from the global parent, it is important to note that it is not only for Cummins India standalone, and as a result, the reaction that we are seeing today could be a bit of an overreaction.
Okay, all right, Vamakshi, we'll keep that in mind. Thanks very much. Helpful explanation over there. Let's focus on one more stock that's actually falling after reporting Q1 numbers, and I'm talking about Tata Motors. It has been the weakest link on the Nifty actually since morning. Still down about 3.5%. The numbers look like they were above street expectations. But of course, there's a lot at play here, including the demerger of the passenger vehicle and the commercial vehicle business. We have Sonia here with all the details. Sonia, tell us more.
Well, you know, 2 reasons for the stock fall. One is, of course, the stock has rallied a lot. It's been one of the big movers of 2024. And the other is the management commentary was a bit cautious on the call, and that has spooked the street a bit. So let me take you through the numbers. Good quarter, better than what the street was estimating. JLR guidance has been retained for Tata Motors in this quarter. But the management commentary was cautious, specifically with the Jaguar Land Rover business. They've said that both China and Europe are seeing demand headwinds, and now customer acquisition cost has gone up, and that's really hit, the view going forward, and hence a little bit of profit taking. If you look at the consolidated numbers, not bad at all. Revenue growth is 6%, but the EBITDA growth is 19%. The margins have improved to 14.5% versus 12.9%, and the profits have gone up 74%. Brokerages also continue to stay bullish because of the progress that JLR has made both on the fundamental as well as on the balance sheet. So Jefferies retains a buy. They've raised their target price to 1330. Nomura revised their target price a tad bit higher to 1303 versus 1294 earlier. Back to you.
Okay, thank you very much for that. But the big stock is Zomato. Rallied about 3.5% yesterday after reporting the Q1 numbers, but it's followed it up with a 10% uptick. Brokerages too have turned incrementally more bullish. Mangalam joins in with the details. Mangalam.
Well, the results yesterday were great. There were no doubts about that. 74% jump in the company's revenue. If you look at the profitability as well, year on year, it's jumped by almost 10 times with a strong improvement in operational performance as well. Their gross order value at 26.5% for the food business was much above street expectations. Even Blinkit, gross order value of close to around 130% growth out there was again above street expectations. More importantly, what's happened for Zomato is that the food business, which has led growth, will continue to be stable when it comes to its growth, and at the same time see further improvement in their profitability. So the benefit of operating leverage plays out for them, whereas Blinkit, which has been on a hyper growth mode, will continue to do well along with further improvement in profitability. So Blinkit's adjusted EBITDA loss is now narrowed just to about 3 odd crores, and the management believes that despite the investments that they are going to make in this, it will be profitable. What does the street like about the management commentary? The most important part is that Blinkit, they had a target of 1,000 stores by March 2025. That's been increased all the way up to 2,000 stores by 2026, and that's not all. They believe that they can do this profitably. Food delivery business as well is stable from a medium to long-term basis with a target towards that 4 to 5% adjusted EBITDA margins from about 3.5% right now. And the third vertical that they're seeding is the going out vertical. Remember, the company has been doing well in the dining out business. They see further use cases for that in movie tickets, sports tickets, maybe live entertainment options, etc. And to that, they have announced the launch of District by Zomato that will come about in the next couple of days. What we'll watch out for is whether they do that organically or inorganically as well, because they've in the past said that they will go ahead and buy Paytm's ticketing business. So what happens of this is something that the street will be watching closely, because if that were to happen, then as per the company, this will definitely be the third largest business emanating out of Zomato's stable when it comes to the B2C space. As a result of which, brokerages have upped their EPS estimates, increased their target prices, and at the same time made a comment like it makes it very difficult to fairly value the company given the sort of growth that has happened. And that's a comment coming in from Motilal Oswal.
All right, thank you very much for that. Get into a break. We'll discuss market fundamentals, individual stocks with Neeraj Chadavar of Axis Securities. Welcome back. Let's talk markets and the way forward. Neeraj Chadavar from Axis Securities is now with us on the show. Neeraj, morning. According to you, the fair value for the Nifty by March of 2025 should be 24,600. Well, we've already surpassed that. So the question now is, if you want to make money, participate in the market, then you've got to pick the right stocks. It's a very bottom-up approach. So what would you recommend on that front?
Yeah, thank you for having me on the show. Yes, you correctly pointed out that for March 25, our base case target is 24,600. So at this juncture, what we believe that most of the narratives are priced in. Market was rallying based on the narrative. Now going forward, market will continue to follow the fundamental and likely to adjust to the fundamental going forward. So in that regard, style and sector rotation will play a meaningful role for the alpha generation going forward. So interestingly, what we have seen that in last 1 month, the growth theme has picked up solid with a double-digit return in last 1 month. The momentum was first time after a long period has come on the second and third rank. So we are clearly witnessing style and sector rotation in the market. So in that regard, with what we believe that Going forward, the margin of safety in the mid and small cap has reduced as it is available in a large cap space. So going forward, the flow could likely to be skewed towards large cap. So in that regard, growth at a reasonable price and quality theme will attract more money and more flow going forward. What we believe that private banks, IT, consumption, pharma and telecom will looks very attractive at current juncture as compared to the other texture of the market.
Neeraj, hi, good morning. So let me take up the first item on that list, right? Private banks. I think you like HDFC Bank and ICICI Bank, among others. Now, what about this whole debate and narrative around the hunt for deposits, which is getting more and more difficult, margins coming under pressure. Now you have the LCR guidelines. Sooner or later, they'll become reality, which means that banks have to start shoring up their LCR buffers as well. So the environment seems a little challenging. And some people are saying credit costs will only go up from here on. So from an investor standpoint, does it still merit an entry right now?
So in our top, we continue to...
Neeraj, I think we're having a bit of a trouble with that line. Let's just see if we can get you back on. Those are some of the top bets of Axis Securities. You can see the banks are right on top, including the State Bank of India, actually, on the PSU side. Some other names included Dalmia Bharat, Nestle. There's also Federal Bank, so pretty heavy on banking and financials. There you have it. TVS Motors, we're just discussing the two-wheelers. So those are some of the top picks at Axis Securities. Neeraj, yes, you were telling us about your call on private banks. Go on.
So we continue to like HDFC Bank and ICICI Bank in our private banking space. Yes, correct. Currently, the banking universe is currently getting challenged with the deposit growth rate. So, but we believe that given the texture of the market, the valuation is very reasonable zone. So whatever, so going forward, the incremental money from the domestic funds and even from the FII fund, we will find more space in the private bank universe from next 6 months to 12 months space. So that's why private banks in terms of valuation, it's a clear bet and clear to park money, any incremental money at the current juncture.
Varun Beverages was a stock which comes up in your top picks. I think this quarter's numbers were a bit disappointing. So is there a rethink on Varun Beverages?
So, so the Q1 quarter was on a volume side. It is one of the fantastic quarter, but we have seen that the OPEX cost has increased sharply for the quarter one. What we believe that the next growth market for the Varun Beverages is the African market. What we believe that the growth story, what the Varun Beverages had seen in the Indian market, the similar story can be replicated in the African market. So we continue to believe that there is a good growth story going forward, and the current flavor of the market is more growth oriented. We continue to like Varun Beverages. It's a good portfolio stock. So one should have it in a portfolio, and we believe that they continue to deliver a solid double-digit volume growth in the upcoming quarters.
Okay, so that's on Varun Beverages. Neeraj, just before you joined us, you were having this debate around Ola Electric, right? And what this new entrant will mean for the others already out there in the field. Your pick is TVS, and TVS has also been really expanding its EV portfolio. So just take us through your pick. Why TVS? Why not a Bajaj? And I mean, do share your view on Ola if you have one.
So in terms of TVS,
yeah, Neeraj, go on. We can hear you.
So at this current juncture, we like TVS Motor in our topics recommendation. We believe that TVS has all the checks available for the growth in the EV space. They continue to have their leadership position in the EV space. What we believe that the better pricing, the better model which is available in the pipeline, we believe that TVS has all lever available to grow their EBITDA in a double digit from FY24 to FY26. So that's why we continue to like TVS over and above other player in the two-wheeler space. But we believe that the Hero Motor is the second bet, which we are also likely to be in pipeline. The all bet will be on the rural recovery, which are likely to get start from the upcoming festival season. So we need to see how the volume will likely to pick up. So all eyes will be on the upcoming festival season. Given the budget influx which is given in the upcoming in the budget, along with the normal monsoon, we believe that the rural recovery is on the card. So we continue to vigilant on the recovery for the Hero Motor also.
Okay, thank you very much, Neeraj, for joining in with your thoughts. Get into a break. On the other side, we'll invite the management of Bansal Wire Industries to talk about their Q1 numbers. Welcome back. Bansal Wire is the company on our radar right now. The stock is currently at 370. Remember, it's a recent listing. It listed only on the 10th of July. That's less than about a month back. The issue price was 256. So from that level, the stock price has gained close to about 44%. Now, they came out with their Q1 numbers, and it looks like a good set of numbers. A revenue growth of 49% and a profit jump of 82% on a year-on-year basis. This is a company which manufactures stainless steel wires and steel wires. It's a manufacturing company. Pranav Bansal, MD and CEO of the company, is now with us on the show. Pranav, morning. This is Reema here. First, if you could just break up this top line growth of 49% in terms of volume as well as pricing growth.
So for the whole quarter, I would say majority of this growth has come from volume. While there has been some increase in the pricing as well because of commodity pricing, but I would say about maybe 5-7% of it would be because of prices. A majority is because of volume. Because our new plant is ramping up, so that's the main area where we've seen our growth coming from.
Okay, so with the new plant coming on stream, can you expect this 40% plus kind of volume growth to sustain for the next 2 or 3 quarters?
Well, I would in fact say this is only a start. The future for this year as well is brighter than this quarter because we've just ramped up our production. It has only reached to a 5-10% capacity utilization for the new plant. Within this year, we would be able to increase our capacity by up to 2.5 times of what it was last year. So with that kind of ramp up as well, we are looking at better numbers, in fact, for the whole year.
So can you take us through this capacity utilization ramp up? Say in Q1, it was only about 5-10%, and we saw this volume growth. By Q2, Q3, Q4, what would the capacity utilization ramp up to? And therefore, what can be the incremental volumes and revenue growth?
So I would say the main thing here is about the expansion. So today we are at about 2.5 lakh tons a year capacity, and now with this current expansion, we are adding 3.5 lakh tons. So by end of this year, as far as capacity goes, we will be at 6 lakh tons. Therefore, the scope for us is more than 2 times. Whereas capacity is concerned. Even in ramping up, I would say we are expecting to fully utilize the capacity within the next 2 to 3 years. And majority of it you will see within this year.
Pranav, hi. I remember last time when you were in and we were having a conversation, you were still in IPO mode, so we couldn't press you on too many numbers. Now that you have this whole capex plan at play, just give us the revenue projection. I mean, what does this translate into in terms of FY25 revenue growth and then the revenue target for FY26 as the capacity comes on stream?
So, ma'am, in our business model, the first thing is that revenue is not really something that tells you what you've done. It is more about the EBITDA growth, because at the end, everything depends on volume. And because we have a cost-plus model, our EBITDA remains the same. Now, when we talk about that, I would say as a company, we've grown at 20-25% every year. With the recent public issue and this being a completely fresh issue, we are targeting something a little higher, whether it is this year or the next 5 years.
So Pranav, just allow me to understand. Your top line has been flat. I mean, FY23-24, you were around 2,400. So it'll help. While we always look at EBITDA, of course, but a top line projection also helps, especially because you're adding more capacity on stream, right? So that volume should translate to and you've got a price increase this quarter. It should translate to a higher top line. And then give us the margin picture as well, because margins have improved this quarter quite a bit. So is this 7% kind of a level sustainable? Full year, targets for revenue, EBITDA and margin?
So I would say, as far as this quarter goes, wherein we have done about 800 crores of revenue and 60 crores of EBITDA. In the coming quarters, this will only improve, whether it is revenue or EBITDA. In both numbers, we will see a good increase each and every quarter. By the end of this year, I would say we are looking at anywhere between 33,000 plus kind of a revenue. And similarly, EBITDA also, there will be a good jump.
Okay. Earlier, you told us that you will be focusing a lot on the, I think the high carbon segment, if I remember correctly, basically where the margins are higher. So can you just give us the product mix split at the end of Q1 and where you think you'll be by the end of the year?
Sorry, can you say that again?
The product mix split at the end of Q1, just trying to understand how much is it high carbon sales and how much is it low carbon, because you explained to us that high carbon, I think, is where the margins are higher.
Yeah. So I would say in totality, high carbon out of the total volume would be about 30%, close to 30%. And this is what we're looking at for the future as well. In fact, the fourth vertical, which is specialty wire, is also set to start within this financial year, and which we will see main capacity coming next year as well, because of which we will also be able to expand our margins in the future.
Okay. All right, Pranav, we will have to leave it on that note for now. Shorter conversation, but we look forward to the next one as well. Good luck with the plans for the rest of the year. That is Bansal Wire, recent listing, and the first quarter has been quite well for the company. Stock is holding up about 0.5%. Let's take a quick break. We'll come back on the other side and get you more on the markets. Welcome back. Let's move on to an interesting story. This relates to Reliance Capital. Now, we're picking up from sources that Reliance Capital's Committee of Creditors has actually sent out a notice of default to IndusInd International Holdings. So, not quite going smoothly over there from the looks of it. Ritu is here with more details. Ritu, what are you picking up?
Well, Surbhi, we may just see the lenders reopen the entire bidding process for Reliance Capital or take some other such action against the Hindujas for failing to comply with NCLT's directions on depositing money in an escrow and so on for the acquisition of Reliance Capital under IBC. Now, we've been given to understand from our sources that the Committee of Creditors for Reliance Capital has now issued a notice of default to IIHL, which is a Hinduja subsidy, for not meeting the deadline set by the July 23rd order, where the NCLT had directed IIHL to deposit 2,750 crores as equity component of the offer in an escrow account no later than July 31st. That deadline has already passed, and to also submit to the monitoring committee copies of the binding executed term sheet for a loan amount of the remaining portion of the bid, which is 7,300 crores, and complete the acquisition by the 10th of August. However, as we've been reporting, Hindujas had subsequently moved the court to seek some modifications in this order, stating that there were several pending conditions that would have to be met by the lenders before they would deposit the money. So while the court has yet to rule on this Hindujas plea, the lenders have now sent this letter of default and a warning of sorts that the rights and remedies of the COC are reserved in view of the default by Hindujas. And these remedies, according to our banking sources, could include, like I said, restarting the bidding process, cancelling that letter of intent which was issued to IIHL earlier, and so on. So we'll have to see how this moves forward from now. But, a delay looks inevitable, and in the worst case, the entire process would have to be restarted.
Okay, thank you very much for that. We leave the Nifty pretty much unchanged, still down close to about 200 points. The mid-caps, which were attempting a bit of a recovery, it had recovered more than 101% from the day's low, is faltering a bit. So from 11 to 12 o'clock, we haven't seen the mid-cap recovery continue. It's plateaued, still down close to about 400 points. But as we wrap up on the show, we're going to leave you with some good news, great news. The numbers are out and it's final. India watched Budget 2024 with CNBC-TV18. CNBC-TV18's dominance continues as it knocks out competition on Budget Day. CNBC TV18 is the clear number one with 91.2% viewership during the budget day.
Well, continuing its 25 years of leadership, CNBC TV18 wins another gold on budget day. Thank you, viewers, for your consistent patronage, trust, and your continued support.